Hey guys, Josh here with Forex Successful Traders. We're getting ready for FOMC here in about another 40 minutes. Armando is going to be coming on here in a second, going over some of the basic stuff with our software, what we're going to be looking at, and then we'll get into the FOMC release. So anyway, it's going to be an exciting event here. Armando, take it away.
I kind of wanted to do a little bit of a different format and start out the FOMC a little bit earlier, only so that we can answer some questions about our software. We always get a lot of questions from many traders that are looking at our system and trying to evaluate whether it's right for them or not. I decided to do a little bit of, rather than we always invite some guest in the room, and then we basically just do our thing. We don't really get too much into Q&As, specifics anyways. We just want to get you to kind of get a feel for how the system works and what we're doing. But I know a lot of times things are happening so fast that many of you really, it's like a blur. And so I thought this was the better thing to do, just trying to give you a little bit of time so that I can answer some of the Q&As. And then, when the FOMC time comes around, at least we can focus on what we do here, and hopefully, that'll give you a better insight. One of the things that I have to say, number one, our system, our matrix, it's designed to help you understand how to interpret price action. Okay, keep in mind the only leading indicator that you and I and all of us retail traders really have access to is price action. In our case, we call it price movement. Okay, but a lot of times I get a question, what's price movement? Is it like price action? Yeah, absolutely. It's the same definition. Price action, price movement, they're both the same thing. By definition, what normally price movement traders do is that, if they're looking at charts, which is, normally the conventional, you're seeing the projection here, it's a 5-minute chart. They're always looking at smaller time frame. In many instances, many of them are looking at 15 minutes or greater. But because of our system, we can actually get down to even smaller time frames. But when they're looking at charts, they're basically evaluating prices. They're looking at the patterns that are getting formed, and based on those patterns, then they're going to look for potential areas where the market is going to move to. And then go ahead and make decisions when the market gets there. When you're trying to do this with charts, it's extremely, it's difficult first and foremost to master. It's going to take you a long time. I would say on an average, it's going to take you years. I can take this as an example of myself. I've been trading for a long time. I started trading, and I don't want to give away my age, but I started trading way back when you couldn't draw, you couldn't get software that would do charts, not unless you worked for a major company that they could spend a lot of money on the kind of stuff that we see today that you basically get for free. You're basically charting packages. Back then you would have to pay thousands and thousands of dollars, and it was extremely expensive to say the least. But I had to draw these things. I had to draw, the open, the close, the high, the low. I had to do this on paper and pen, and that's how far back I go into trading and trading technical evaluations. Okay, so I've been studying charts for a long time, and I can tell you that when I finally decided I wanted the only leading indicator that was available to us retail traders, I understood that if I was going to get better at it, I needed to find some other way that I could see multiple time frames so that I could make better decisions. And that's how the matrix came along. That's how we came up with the matrix. That's how we put this matrix together. And a lot of the math that's in here, which I'll get into shortly, this is basically stuff that came from a market maker, a guy who worked for a bank for over 30 years, 25 years, and this is what he used. These levels that you see in here, which again, through time, obviously they've changed a little bit because the markets do change, and we've had to dynamically change them. But but it's still the dynamics of it is, or the foundation is still probably over 30 years old, and it still works today. You'll see here, and I'll point out to some of the moves when they do occur, how precise they are. But for the most part, if we look at the bigger time frames, which is what I was going over here earlier on today, and I was covering with some of our traders. If you look at dollar CAD, and I think for the most part, I'm taking for granted that everyone that's in the room is some type of technical trader. You've done some charting, and you understand support resistance levels, you understand trends, you understand ranges. If you don't, if again, this is totally new to you, don't worry about it. This is stuff you can learn. There's so much information about it. I'm not even going to get into this because you can get so much free information online about this that you're not going to have a problem eventually learning it on your own. What you probably are not going to be able to learn on your own is really how to interpret price action. And even some of you that have been trading for many years and are probably pretty good at recognizing patterns, et cetera, on charts, there are just some things you'll never be able to master. Not because you can't, but it's because visually it's so difficult when you have many charts like this. Right now you see I've got a dollar CAD, a euro dollar, a pound dollar. I've got 5 different currencies, or 4 different currencies here, because this is a weak currency of a weak time frame of the euro dollar. But when you're trying to trade, if all of these charts were different time frames for the same currency, trying to put all this information together and recognize the finer details of how to trade between one time frame and the next are extremely difficult. Not impossible, but very, very difficult. And in all honesty, I haven't seen anybody master it unless they start using the matrix, and you start seeing some of the details that before you just wouldn't be able to see on charts. But keep in mind, once more, if you really want to be a successful trader in Forex, and when I say successful, I'm saying longevity-wise, okay? Because I'm sure some of you have seen success, and as I said a lot of times, if you're in this room, is because you've either been successful in the past and now you're not seeing success, or you've never been successful and you're trying to become successful, or in many instances you basically are looking at this for the first time, and we want to kind of shed some light on why, if you're going to have any chance to have longevity in this business, you've got to learn the ability to interpret price action. Okay, and then if you understand everything else, if you've studied all the other stuff, great. That's just additional tools you have in your toolbox. But the longevity of being able to sustain yourself in the long run in this business, it's all about price action. Why? When you learn any market condition, all right, you can interpret any market condition. You can be a counter trend trader. You can trade ranges. You can trade ranges inside ranges. I mean, you name it. You become what I term, and I haven't heard anyone else use this term, and it's you can become a situational trader, okay? Which means you trade based on the conditions of the market, and you can adapt. You can adapt quickly. And that's the beauty about what the matrix allows you to do. Like anything in life, it takes time to learn it. But as I've said in the past, if you were going to try to learn how to interpret price action on a charting package, or just your regular charting packages that you get out there, it probably would take you several years. And not only several years, but I would say at best, you would probably be able to trade one time frame. In other words, you would not be able to really learn how to take multiple time frames and combine them together to see the details of how you can trade a lot of different conditions in a market that, again, very, very tough to do with just one time frame, okay? But nevertheless, if you're successful doing it, then more power to you, Like I said, then there's probably a good chance, I don't know why you're here, because again, if you're already successful, you really, as they say, don't fix anything that isn't broken. But I take that if you're in here right now and you're listening to this, you're either one of our traders that have heard this many, many times. So I apologize to you guys that, I have to repeat myself. But you're also somebody who, basically just things haven't gone well for you, and you're looking for something that's going to make that difference. And if you're like every single one of us that are in here, you're very passionate about trading and you want to learn how to get it done right. So here's what we're going to do here now, and we're going to get into our system and how we interpret information. Give me a moment. I'm going to answer some of the questions. Okay, I see I've got some questions. But what you're seeing here right now, and let's just evaluate the dollar CAD, because I did this earlier today. I went over it with our team, our traders in here, and we were looking at dollar CAD. We've been talking about dollar CAD for quite a while. Let me come in here. Let's look at the big time frame, the week. Okay, as I went over this with all our traders, and it's pretty obvious. It doesn't take. You don't need to be a rocket scientist that. If you were to look at dollar CAD, if you go back to January, it's going up, right? This is very simple. If you're new to this, you don't have to be a rocket. Which way is the market moving? Up. This means that the dollar, the dollar right here, is gaining momentum. It's getting stronger, and we're seeing the dollar get, in other words, the exchange rate is becoming favorable for the dollar. You've got to pay more CAD to get dollar, okay? So for the, I think I've got two that are very new into this. Again, you could go and do more research, but overall, you can see this is what's called a trend, and in a trend, what you look for is higher highs and lower lows. So when you start doing some study on this, you'll see that, it talks about higher highs, the prices go higher, and when they retrace, they go lower than the previous low. And this is how you set a trend. This is an uptrend, okay? Same thing happens on the downside. If you're looking at the euro dollar, you come here. Again, it doesn't take much of a, you'll need to be a rocket scientist to see prices in here, again, going lower. So you get, in this case, because it's down, you get lower lows, lower highs. Lower lows, lower highs. Same thing, lower lows, lower highs. You see this high is not as high as this high. And this is not about getting high. So, yeah. So anyways, so that's just keeping that very simple, a quick explanation on that. But what you're seeing here is, in many instances, you find a lot of other products out there and other people selling you chart packages, etc., and kind of giving you that their signals kind of called this. Hey, look, you could have gotten in my signal, called it down here. You could have been long. And look at this. You could have taken the trade from down here, and you could have written it up to down here, up here. And by the way, this you could have taken a one lot, and this would have turned into $1 million. That kind of stuff. So from January to, what is it that it is today, September, you'd be a millionaire. You hear this kind of stuff. Well, is that possible? Absolutely. But is it probable? That's the tough part. I've been doing this for a long time, and in order to ride something like this, the amount of risk, and this is why, again, many of you that are in here, this is why you're in here, because maybe in the past you've taken advantage of these kind of market conditions, and you've been able to make to this here, somewhere in this area, out of this breakout, and I took this and I made 1,000 points out of it. Okay, more power to you. Awesome. But the truth is, how often do you really have a chance to do that, and how consistent can you be able to do that? And that's really where, the truth in this business, many hold back from, and don't tell you that situations like this, if you're able to hold on through something like this, if it's anything like it was for me back in 2004, when this kind of situation was happening with the euro dollar, and I got swings like this, these are major swings. This is a market that, let me just erase this just to give you an idea. Let's look at something that's really easy. Let's look at this, where this market came up to, okay? And let's say if you're a trader who's been using, lagging indicators, which, by the way, that's what every single one of you use. You're using lagging indicators. What is a leading indicator? The only leading indicator that's available to us, like I said, is price action, and that's what our software is about, and that's what I'm going to get to in just a moment. So give me a second here. But the only other leading indicator you will never have access to, which is volume. The only ones that see volume are your market makers, your banks, okay, the big banks. And it's because they're holding on to it. They can't see maybe volume from another bank unless they share that information, and we've seen in the past, again, they've been caught for doing that. But for the most part, a bank is the only one that has access to that information because they're sitting, they have the volume. So they know, generally which way the market, they can move the market. But the only thing we've got as retail traders, the ability to recognize if there is something like that developing is once the prices move, that's really the only thing we have. Everything else is always going to be after the fact. Every other indicator is going to move or is going to give you signals after the fact. So what we like to do here, and going back to this kind of stuff, is if you were trading purely on technicals and on breakouts, etc., and let's say you were lucky enough that you caught on to something like this, all right? And I'm going to use this example because I went through this, like I said, back in 2004 when I was trading the euro dollar. And like I said, every time, it didn't matter where I bought euro dollar, as long as I bought it and I held on to it, like a stock, the thing just kept going up, and until we got into 2004, late 2000, or 2005, where the market started to have some major retracements and some swings. And as I've shared with some of my traders, this was the time when it almost, forget that it almost put me out of business, but it almost put me in 6 feet under. Because if you've ever gone through losing, 6 figures, I can tell you that your heart doesn't take it very well. And so I even as healthy as I was, and as athletic as I was, I can tell you that I had some severe pains in my chest and many sleepless nights. And it was during something like this right here. I had gone ahead and I had taken a breakout trade. If you see here, and again, if you don't know what a breakout trade is, Google it. You'll learn. But I had taken a trade long, like here, and then the price kept going, and I kept adding positions. And to say the least, I was pretty heavily leveraged. And then we had a big retracement like this. And keep in mind, this here is about an 800-point retracement. And, I had made so much money in here that, like so many traders, once you make a lot of money, you don't want to give it back, In some instances, you don't want to give it back because you've already spent it. That's the worst part about it. But luckily enough, I had not spent it. I just kept investing more and more as, the euro dollar kept going higher because I had done very well. And then I had this major retracement. And I got to tell you, in one instant, I lost a whole lot of money in a position like this. And like I said, it almost put me. Forget that it almost put me. I wouldn't say broke because back then, I always used money that I could afford to lose, but it still hurt a lot. And the pain was so severe that I felt almost like I said, that I was going to be more of someone that you're going to have to bury. Let alone, the fact that I lost a lot of money. But what I learned in this instant here is that I couldn't continue to do this kind of trading. I had to make a change. I had to move beyond, just being just a regular technical trader at the time, and I needed to learn more. I needed to become more sophisticated with understanding fundamentals in the market. Although I was already pretty good with fundamentals. But quite honestly, I didn't implement them as much as I should have. So I knew I had to make some changes. And, once more, being a big risk taker, I just felt euro dollar was going to keep going higher. So, again, I just took what I had and I kept doing the same thing. And eventually, I kept adding positions, and eventually it made a move like you're seeing here with dollar CAD. And again, I'm just using dollar CAD because it's open, but it was very similar. And I made everything I lost and then some, and did very well. But what I learned in that process was that if I was going to sustain longevity in this business, Forex was not necessarily your conventional instrument that you could do this type of trading like you do with some of the other instruments, some of the other whether it's stocks, which is what I had traded a lot. I had traded a lot of commodities and S&P, etc. Some of these concepts and some of the stop losses that we were implementing to be successful trading currency, I pretty much realized that I couldn't, I just couldn't sustain a long-term business if I was going to keep doing that. And that's how I started really looking and getting involved in learning how to trade price action. And eventually got involved with another market maker because I'd already done some of this stuff with other market makers. And I got involved with a market maker. We developed a business relationship, and we developed a matrix. And from there, the rest is history. I really started to evolve as a price action trader. And, the more I looked at things, the better I got, and the more details I started to understand. And today, I have to say that, we've got several success. I say we have thousands. We haven't really existed or tried to do that much, but we've got several successful traders. Like everything in life, what you put into it is what you get. And as I said, one of the things about our business is, too often, because you can make such fast money, we that. The truth of the matter is sometimes we really don't know what we're doing, but yet, our egos tell us otherwise, and we get in trouble for that. So we like to be very transparent and just tell you things as they are. And once again, this is kind of the stuff that I know most traders, this is the background that most of you have. What I'm showing you right in here, how to trade these concepts and these technicals, and you keep looking for more technicals to give you more information, but the fact is they're all lagging and they're more of the same. So, once again, price action is where it's at, and that's what we've done here with the matrix. We've put together something that allows you to see where the market potentially is going. It allows you to see direction, and then not only direction, but when it does move, how far is it going to go before it kind of runs out of gas and kind of just takes a break. It takes a breather. And so if we're looking here at, let's just look here at our euro-dollar matrix. We've got what we call Fibonacci walls right here in the red zone. Okay, and you see this is a 1 minute. By the way, if you haven't already done your due diligence, what you're looking at is a 1 minute time frame. This is a 5 minute, this is your 15, 1 hour, and 4 hour, okay? So you read from right to left, shorter time frames, start out here on your left, and you read this way. That's the way most of the world reads. I know some other parts of the world, they read opposite, but that's, our conventional way is right to left. So anyways, before I get into, our arrows are very simple. Our arrows just dictate the direction the market's moving. This is your trend, okay? And some of you, we call it price movement indicators. Some of you guys want to call them moving averages. That's fine. They're moving averages. It's just whatever you want to call them. But more than anything, they're just indicating direction of where the market's moving in that specific time frame. And so what we have is, as I said, if you've got five different time frames, and you want to know direction of those 5 different time frames, you can see them quickly in here as they unfold. And rather than try to see this on 5 different charts, which is kind of, as I said, a pretty good amount of information, significant information. Sometimes it's overwhelming to put together. It's a lot easier to come in here and see that you've got your 5 different time frames. In this case, 2 of them here, your short term, are cooperating with your 1 hour, but then you've got a 15 and a 4 hour that are not cooperating. Okay, no big deal. This is we'll get into interpretation of that. That's the next stage of when you start learning how to use this thing. But the simple thing is, where is this market going to? And if you notice right here on the chart, this is a 5 minute chart you're looking at down here, okay? This is your 5 minute chart. Watch what just happened right here. This price, this wall right here, this is our Fibonacci wall. This is a 5 minute wall. What that means is that wall is not being displayed in here, but it's right in here. There's a wall in here at 35. And we don't like to show these walls in what we call the active zone, by the way. Let me make sure I indicate this white area in here, okay, this is what we call active zone. You can trade in here because that's always the question we get. Well, it's the only trading you guys do when the prices run to the red or the green zone. No, you can do some trading in here. You can do some active trading. But we want traders to learn first how to interpret real price action. When the price is moving really hard and it's very easy for you to recognize, because a lot of times when prices are moving in here in the white zone, they're not as clear. That detail takes a little bit of time to learn. But what's very, very clear is when prices run into the red zone or into the green zone, then once they get there, we start to look for areas of resistance and support. And that's where you start seeing these walls that if you were trying to see these walls in separate charts, man, it'd be very, very tough to do. Let alone these charts, by the way, these levels you're looking at are dynamic Fibonacci wavelength indicators, okay? They're proprietary. We put this together. How we came up with this is, as I said earlier, the banker that initially I started doing business with, he used this for a long, long time, very successful with it, and basically are what banks are using this still today, with some modifications that we've made through time, and we continue to make as the product continues to develop, because times do change, dynamics do change, but the foundation is very, very solid, and it's been working for a long time. But look here at, again, look right here at this 5-minute chart. Look where the price went up to. Look at how the price went up to that 1335. Exact, and it doesn't always happen this way, but you'll see quite a bit of, when you start understanding price action, why these things occur. Notice how it went up to that 35, and look, the price was rejected. And the price is going to come probably back down here to this next wall, which you can't see. It's about 23, 24. The wall is going to be just about here. So we had a wall here at 35, and it's going to come back to this level. It's going to use a combination of 1 minute and 5 minute. But once you understand price action and you can start seeing these finer details, then you can start trading in here. And the beauty to this is not going to take you years to learn. You can learn this in months. I'm not going to say weeks, because realistically, you can learn it in weeks, but you're going to need time to execute, and that takes months. But what you can learn, and it's a lot easier, and like I said, we all learn at a different pace, is when prices do run up into the sell zone or they do run down into the green zone, if you start understanding how these walls work, this is where you start now getting to that level of understanding price action. Because just because it runs up to here to this level, these two walls, doesn't necessarily mean you want to go ahead and sell. You're going to find under different circumstances, like we do today with the FOMC announcement, that in many instances like this, we don't want to trade. It's too erratic, okay? And we advise you to stay out of the market. So you will see during prices go up into the red or the green zone, and we're not going to do anything right away. We're going to wait. We're going to wait for price action to dictate when and where we want to act. And so what we understand is the more of these levels we're able to see in such a little tight piece of real estate, the better our minds are and more focused our minds are in being able to make the decision of where to buy and sell. And then your managing of the position is the next thing. All these things, we're going to teach you how to do it. Unless, as we've seen some traders, they just want to get the software and do it on their own. That's fine. You can do that. But we do give you support. So to your question, what happens here, we do have a morning session. We do morning sessions every day, live sessions, evaluating the market and, possible trading opportunities. If you can't make that, don't worry. We record these things. You can learn from our video library, and you can do this at your own pace, okay? So that's not a problem. But getting into, for example, if we were to see prices, as I stated, move up into this area and hit this 53.51, it may not necessarily tell us to trade. What we might do, again, based on price action, is we might wait for this to go through this area, 53.51, go up here to 61, and then trade 61. And then there's a good chance 61 will drop the price back down to 51.53, and we can make some points out of that trade. But here's the beautiful thing about this. anytime we take these trades, remember the market's never, it doesn't matter, even under really stressful conditions. And again, we just never know how far they're going to go. And this is why we always have to be adamant about what's happening. What's the news event? Because the news event could definitely drive the markets, as we saw some time ago. It can drive the markets 1,000 points, just like that. So we always want to be prepared for information fundamentals that can cause that. And today is one of those days. The FOMC, this FOMC, the information is going to come out here in the next 10 minutes can cause that. So the point that I was trying to get to is this is all about recognizing price action, interpreting price action, executing on price action, and then being able to manage off of price action. And if you learn to do that on charts, I've got to say, more power to you. You're my hero, because I've had many traders like myself, who've been trading off of charts for many, many years, 10 years plus. And once they start learning the finer details that they can see here by trading with the matrix, their response is always, wow, X amount of years ago. Why weren't you guys available to us sooner? Because you'll learn how to trade, for example, how to use a 1-minute time frame and trade it back to a 5-minute time frame. And these are signals that, again, these are trade setups that we have. We'll teach you how to recognize them. And as I said, the dollar cat actually that I was talking about earlier was a refuel trade that I took yesterday, and with a minimal of 10-point stop loss, generated over 30 points of profit for me. And by the way, I started out with a 10-point stop loss and quickly moved it up to -5. So again, quite a nice return on investment. So once more, I see that we've got about 10 minutes here before the Josh just told me we've got 10 minutes here. So I want to go ahead and kind of shut it down for now. I know I want to kind of get into evaluating this FOMC announcement, and then we'll go ahead and do some more Q&As.